The latest San Diego housing data is a little baffling to say the least. Homes are taking longer to sell and many are closing slightly below list price. Yet inventory is dropping fast and prices are still holding. At surface level, none of this really makes any sense. So in this week's local San Diego data review, I'm gonna walk you through exactly what's happening in the San Diego housing market and most importantly, how you can best position yourself in today's market. Because when you connect the dots, the picture gets a lot clearer on the true direction of our market. All this and more is what we're breaking down in this week's San Diego Market Matters. And I'm Karl Kyler, your San Diego Realtor. If you haven't subscribed yet, consider doing that now so you can stay up to date on exactly what's happening in the San Diego housing market. Now, let's dig into this. Kicking it off with new listings, because this tells us how many sellers are actually stepping into the market and what's becoming available for buyers to look at. In February, San Diego saw 1,503 new detached listings and 908 attached listings. That's just over a 17.5% drop in detached and just over 21.5% drop in attached compared to this time last year. That is a very significant pullback in the number of homes hitting the market. And the timing here really matters. We're entering the spring season, which is normally when listings start to ramp up as we head towards the busiest part of the year. We typically start to see this happen right after the Super Bowl, but instead of seeing more homes come to the market, we're actually starting the spring with fewer listings than we had this time last year. Now, what makes this even more interesting is where mortgage rates are right now. Around this time last year, rates were pushing closer to 7%. Today, we're sitting much closer to the low sixes. Normally, lower rates would encourage more homeowners to sell and move, but clearly the lock-in effect is still very real. A lot of homeowners locked in ultra low mortgage rates over the past few years, and many simply aren't willing to give those up yet. And there's another level that often gets overlooked here. A large portion of sellers are move-up buyers. So when there's fewer homes that hit the market, it doesn't just reduce supply. It also means there's fewer sellers that are re-entering the market as buyers. That slows down the natural cycle of move-up activity that normally helps drive transactions and supports the higher price points. So for buyers heading into the spring, the challenge may not be demand exploding. The challenge may simply be not enough homes coming to market. Now, if we shift from listings to pending sales, this is where we see how buyers are actually responding to the market. In February, San Diego recorded 1,186 detached homes going pending and 680 attached homes going pending. That's essentially flat compared to last year. The detached was up 0.3% and the attached was up 0.4% year over year. So pretty much flat. So buyers are still active. That means demand hasn't disappeared. And when you connect this to the listing data that we just covered, the picture starts to make more sense. Buyers can only buy homes that actually hit the market. When new listings fall as much as they did over the past couple months, it naturally limits how many transactions are going to happen. So the issue here may not be the lack of buyers. It may simply be a lack of homes available for buyers to actually buy. The other thing worth noting is the attached market. For the last 4 months, condos and townhomes pendings had been running negative year over year until February. February finally gave us a small positive reading at 0.4%. That does not mean the attached market is suddenly taking off, but it could be an early sign that the entry-level segment is starting to find some stability and attraction from the buyer pool. So when we step back and take a look at the bigger picture here, buyers are still active as we are moving into the spring. But if new listings remain tight, the biggest challenge this season may be simply finding a home before someone else does. Now, the next step in this process is closed sales, which simply tells us how many of those pending deals actually made it across the finish line. In February, San Diego recorded 1,008 detached sales and 541 attached sales. Compared to last year, that's a 2% decline for detached and an 11.6% drop for attached. And when you think back to the listings data we actually started with, this result actually makes a lot of sense. If fewer homes are hitting the market and fewer homes are going under contract, eventually you're going to see that show up in the number of homes that actually close. So the decline in closed sales isn't necessarily telling us that buyers have disappeared. It's much more consistent with what we've already been seeing, a market where supply remains tight and transaction volume is being limited by how many homes are actually available to buy. You're also going to notice a pretty clear difference between the two segments. Detached sales are only slightly lower year over year, but attached homes saw a much larger drop. That lines up with what we saw earlier in pendings, where the condo and townhome market has been the more sensitive part of the market when affordability tightens. If we look over here at the trailing 12 months, we will see lots of positive and negative readings in both detached and attached, with a slightly lower 12-month average. Now, I take this as a sign that the market is sustaining and is possibly very vulnerable to economic conditions that are coming and going like the wind. Things like labor reports, interest rates adjustments. In this case, what we just recently saw is the recent war in Iraq. What I don't see here is a market that's falling apart. It's a market that is limited based on inventory and is attempting to operate at as much of a normalized pace as possible. Now let's move into median sales price, because this is the number most people are really trying to understand when they ask, what's happening with home values? Median price is important because it represents the middle of the market. Half the homes sold for more than this number and half sold for less. That makes it a much better indicator of what's actually happening in the market than averages, which can get distorted if a few luxury homes sell, particularly when we have low volume like we do. In February, the median price for detached homes came in at $1,089,795, which is up 2.1% compared to last year. Attached homes came in at $660,000, which is down just about 2.2% year over year. So once again, we're seeing the same segmentation pattern we've been talking about throughout this report. The detached market is still holding modest price growth, while the attached market is showing a little bit more pressure. And when you think about the data earlier that we looked at, this actually makes a lot of sense. The attached market is typically where first-time buyers enter, and that's also the segment that tends to feel affordability pressure the fastest when rates rise or budgets get tight. But the bigger takeaway here is this: even with transaction volume lower than the past few years, prices in San Diego have remained remarkably resilient, especially on the detached side. And a big part of that goes back to the supply story that we've been talking about this whole time. When listings stay limited and buyers are still active, that combination tends to put a floor under how far prices will come down or where they're gonna hit and bounce off of. Now, this is where it gets a little funky. Let's look at days on market, which tells us how long it takes for homes to go under contract after they're listed. This is one of the top metrics buyers look at. They think that if they see market time high, that equates to negotiating room. Well, in February, detached homes in San Diego took an average of 41 days to sell, while attached homes averaged around 50 days. Compared to last year, that's a 10.8% increase for detached homes and a 22% increase for attached homes. Now, this is a little surprising to say the least. We just talked about how inventory is down. New listings have slowed and prices are more or less holding. And despite all of that, it doesn't automatically mean homes sell instantly, which is kind of exactly what San Diego is known for. What's really happening here is a shift in buyer behavior. Buyers are still active, but they're also much more selective than they were during the pandemic frenzy. Payments are higher, affordability is tighter, and buyers are taking a little more time to compare their options and negotiate before making a final decision. You're gonna also notice the gap between the two segments. Detached homes are still moving faster than attached homes, and that pattern has been sustained for months now. That reinforces something that we've seen throughout this entire report. Detached homes remain the most competitive part of the market, while the attached segment is where affordability pressure tends to show up first. So rising days on market doesn't mean the market has stalled. It simply reflects a shift away from the ultra-fast pandemic market to one where buyers have become more deliberate and more selective in how they purchase a home. Now, another metric that helps explain what's happening in today's market is percent of original list price received. This simply tells us how close homes are selling to their original asking price. If the number is 100%, homes are selling right at asking. If it's above 100%, it means buyers are competing and pushing prices higher. If it's below 100%, it means that buyers are negotiating and bringing that price down. In February, detached homes in San Diego sold for about 98.2% of their original list price, while attached homes sold for about 97.6%. That's slightly lower than last year, but still very close to to asking price overall. Now, it's important to understand that seeing this number below 100 does not mean buyers can walk into just any listing and automatically expect a discount. Most of the homes selling are ones that sat on the market longer, usually because they were priced a little too aggressively. Homes that are priced correctly and presented really well are still selling very close to asking price and sometimes above asking even. And this ties directly back to the pricing data we looked at earlier. Even with homes taking a little longer to sell and some negotiating happening, the median price for detached homes is still up year over year. So the market isn't seeing broad price declines in that segment. What we're seeing instead is a market where pricing strategy matters more than it did during the pandemic frenzy. Back then, you could just throw a number out there and the market gave it to you. Now, on the attached side, the numbers line up with what we've been seeing throughout this report, that the segment is feeling more affordability pressure. It makes sense that we're seeing slightly softer pricing and a bit more negotiating room here because this is the entry point for first-time buyers. And think about it, attached homes comes with additional costs like HOAs, Mullaroo's. If they're first-time buyers, they probably don't have furniture, so they have all of these additional costs that come with being first-time buyers that a lot of move-up buyers don't have. Moving on, let's look at the active inventory, which tells us how many homes buyers actually have to choose from. So if someone's going out looking at homes, this is how many are out there. In February, San Diego had 2,379 detached homes for sale and 1,841 attached homes for sale. Compared to last year, that's almost a 20% drop in detached and a little over a 10% drop in attached. And this is where the direction of the data starts to matter more than the actual raw numbers. Normally, as we move into the spring market, we expect to see new listings rising and inventory gradually building. But this year, both of those metrics are actually moving in the completely opposite direction than what the trend is supposed to be doing. At the same time, the pending sales data that we covered just posted their first positive reading in several months, which could mean a few things. Either new rates are helping buyers that have been waiting on the sidelines are done waiting, and or there is more confidence coming back to the market and the idea of homeownership here in San Diego. Right now, we still have more homes coming to market than going pending, so inventory isn't collapsing, but the trend doesn't look good. The rate of growth in inventory has been declining every month for the past 12 months. If this trend continues with listings staying weak while pending stabilize or grow, we could eventually reach a point where pending sales start to exceed new listings. And if that happens, then these inventory numbers will get really ugly for buyers very quickly. Bottom line here, this means that competition is only going to get worse among buyers and sellers are going to benefit from all of it. This isn't to say that prices are going to explode, but based on this data, they're definitely not going to be coming down. So when you step back and look at the entire market together, a pretty clear picture starts to form. New listings are almost down 20% compared to last year. The overall inventory is down 15%, which means buyers are entering the spring market with fewer homes to choose from than they had a year ago. At the same time, pending sales are basically flat, which tells us buyers haven't disappeared. They're still participating in the market, just a little more cautiously than they were during the pandemic years. You can see that caution showing up in the other metrics. Homes are taking longer to sell, days on market has moved up to about 44, and the average home is selling for about 98% of the original list price. But here's the part that really matters. Even with homes sitting longer, buyers negotiating more, the median sales price is still holding, which tells us that the limited supply is putting that floor under home values here in San Diego. And when you combine that with about 2.2 months of housing supply, this is still a market that leans towards sellers, just not nearly as aggressively as it did a few years ago. So what's the simple takeaway from all this? The San Diego housing market isn't crashing. As a matter of fact, it's going in the completely opposite direction of a crash, but it's not the frenzy that we experienced in like 2020 or 2021. Homes are taking longer to sell, but at the same time, new listings are down, inventory is lower than it was last year, and buyers are still showing up and writing offers. And that's why prices are holding up and will likely continue to do so. If the trends that we've been talking about today continue with listings staying weak and buyers continuing to participate, then inventory will continue to tighten as we move further and further into the year, only supporting seller leverage. Now that's a wrap for this week's San Diego Market Matters. If I earned a like and subscribe, now's the time to show it. And if you're looking for an update on the rate market, here is a video that you can watch next, which I just posted earlier this week. As always, I'm Karl Kyler, your San Diego Realtor. I'll see you in the next video.